name is Andrew Demers. I am the Communications Director at the New Hampshire Insurance Department. I'm joined by several of my colleagues from here at the Insurance Department and a couple of folks from the Department of Labor, namely Deputy Insurance Commissioner DJ Betancourt, Director of Workers' Compensation Division at the New Hampshire Department of Labor, Danielle Albert, Attorney at the New Hampshire Department of Labor, Wesley Gardner, my colleagues Ruju Dave, who's a workers' compensation analyst here at the Insurance Department, and Christian Citarella, our Chief Property and Casualty Actuary at the Insurance Department. So we're very happy to partner with Department of Labor. As you'll learn during the webinar, workers' compensation is something that both of our departments touch in various aspects. And there's a number of areas where we cross over here. So we're very excited to be participating with our folks at the Department of Labor. Before we get started with the program, just a couple of quick housekeeping items. We appreciate if you remain muted during the meeting. We're happy to address any questions you might have at the end. And we invite you to use the chat function here in the Teams meeting to enter your questions. And that way, at the end of the presentation, we can address those and have the correct subject matter experts answer your questions. And of course, you know, if you have something that's a little bit more in-depth that needs a personal response, you know, one of our folks on the meeting will be happy to follow up with you afterwards to address any questions or concerns you might have. So we invite you again, use the chat feature, and we'll be happy to get with you at the end. I will now turn it over to Deputy Insurance Commissioner Betancourt for some introductory remarks.
Well, thank you, Andrew, and good afternoon. As Andrew said, my name is DJ Betancourt, and I have the pleasure of serving as the Deputy Commissioner of the New Hampshire Insurance Department, and I want to welcome you to our monthly webinar series. Each month, the New Hampshire Insurance Department tries to bring a team of experts here at the department to cover an issue that we believe is of importance or interest to Granite Staters. And as you know, this month we are discussing workers' compensation. And if you're a business in New Hampshire or have ever been injured at work, you understand very well why workers' comp is so important. As Andrew mentioned, we are lucky indeed to be joined by our colleagues over at the New Hampshire Department of Labor. As he said, between the two departments, we oversee and enforce the laws that regulate workers' comp. And so between our department's team of experts, this should be a comprehensive and informative discussion. You know, by way of further introduction, you know, broadly speaking, New Hampshire's current workers' comp environment is truly a success story. The loss costs in the voluntary market here have decreased in each of the last 9 years and 50% cumulatively over that period. And so stability in this market is obviously fantastic news for both businesses and employees. We enjoy a very strong market right now. And as a result, business owners have the ability and flexibility to shop around with multiple carriers to get the best deal possible for them. But the question is why? What created this environment? And we'll get into that today, but generally the data we have indicates that workplace safety continues to be a priority for New Hampshire businesses, and therefore fewer people are getting hurt on the job, and workers who are getting injured are getting timely and effective treatment so that they can get back to work quickly. So combine this with the continued downward trend in workers' comp medical expenses, and the result is lower insurance rates for employers. And obviously that is great news. So truly a hats off and a congratulations to our state's business community for their dedication to proper safety training and making the health of their employees a top priority. But with that said, let's get into this with more of our experts. And so, Andrew, I will turn it back over to you for our first presenter.
Okay, can everyone see my screen here? Is everyone able to see the slideshow?
I can.
Yes.
Okay, fantastic. Okay, so as we progress through the slideshow, by all means, please just say next slide, and that way I can go at the pace that the presenters are comfortable with. I think first is our friends over at Labor who are going to make some introductory remarks about workers' comp in general.
Yeah, so good afternoon, everybody. I'm Danielle Albert. I'm the director of the Workers' Compensation Division. I think one of those questions that always comes up is workers' compensation insurance. What exactly is that? It's a form of insurance that's required by New Hampshire law. And the law that requires that the insurance be in place is RSA 281A. And essentially, what does workers' compensation insurance coverage provide? It's going to provide wage replacement, medical, and other types of benefits to injured workers whenever an injury that's causally related to their employment ends up occurring. So it's a benefit system that's in place to take care of workplace injuries when they happen. Workers' compensation insurance coverage in New Hampshire is mandatory. So for any employers out there, that's a really good thing to be aware of. Any employer who has one or more employees working within the state is required to secure and maintain a workers' compensation insurance coverage policy. And that's mandated through the workers' compensation law itself at RSA 281A5. For those employers who have structured themselves as corporations and limited liability corporations, or your LLCs, it's good to be aware that as far as obtaining your workers' comp coverage, you are allowed to exclude a certain number of your corporate officers or member managers from counting as employees for the purposes of your insurance policy. And you can exclude up to 3 members. There are certain filings that your insurance carrier has to get to the department in order for your exclusion to be valid. So if you ever have questions about that, you can certainly contact the Department of Labor, or you can talk to your insurance carrier about how do you go about effectuating an exclusion. And there is a specific form that they have to use. The question often comes up about what do I do if I'm an employer? And we see this, I think, at least on the labor side of things with employers that are smaller or are newer to the business industry. What do you do if you're unable to secure insurance coverage? Employers who are unable to secure the required coverage as mandated through the law via the voluntary market, i.e. you've gone out and tried to purchase a policy and a carrier has said, no, I'm not going to write one for you, can reach out to the National Council on Compensation Insurance, affectionately or nicknamed NCCI for short, to secure coverage through what's called the assigned risk pool. And that's a great resource to be aware of if you're an employer, because it is a mechanism by which you can secure that mandated coverage so that you are in compliance with all of the requirements related to securing workers' compensation insurance coverage. Once you have undertaken and fulfilled your obligation of securing a policy, proof of that policy, called proof of coverage, has to be reported to the Department of Labor by your insurance carrier, and that report comes through NCCI. And the insurance carrier has to submit that proof of coverage as quickly as possible, but isn't allowed to do it any later than 10 calendar days from the date that your binder issued.
So hi, this is Christian Citarello. I'm the Chief Property and Casualty Actuary at the Insurance Department, and I thought I would take a little time to speak to the kind of the behavior of the market, or the condition of the marketplace for workers' compensation insurance. As the Deputy Commissioner Betancourt mentioned earlier, it's a very strong market right now, and it has been for several years. We continue to see reduced rates over the last decade. We have many writers. There are 250 licensed writers in the state. Of those, I would say about 140 are active, or at least were in 2021, or the most recent data. And those are the ones that write more than $200,000 in premium. We have a very small part of the business, as Danielle was speaking to a moment ago. If employers have a difficult time finding coverage in the voluntary market, in the kind of the normal marketplace, then they can work with NCCI to get coverage in the assigned risk market. Our state is, I would say, lower than expected as far as the portion of those employers that wind up in the assigned risk market. The voluntary market is welcoming to smaller businesses, newer businesses, more so than I would say in other places. And we have some numbers that speak to that in a minute. Now, it is important to recognize that this is a mandatory coverage. Workers can get hurt on the job. Unfortunately, it does happen. Even very safe jobs, it happens. And so minimum premiums are necessary to maintain that healthy market. And those cover costs to the employer having to do with audits and other, just kind of general expenses, to the carrier. We're going to look at a couple of slides that have some data on it to just reinforce the strength of the market. We see decreases over the last since 2013. I went back as far as 2010 just to show you that it does in fact go up every once in a while. And but as mentioned before, frequency of loss has gone down. The expenses associated with medical costs have been lower than expected. They're certainly not going down on a nominal basis, but as far as what had been anticipated at this point years ago, medical expenses are lower than expected. And return to work. Folks that do get hurt are getting the medical care quickly and effectively, and as Danielle mentioned, the deputy commissioner mentioned, they're getting back on the job. The next slide shows kind of the cumulative effect of this. If in 2010, the premium for usually the base is payroll. So if you have $100 of payroll and that particular type of job, that particular type of position costs $1 in premium per $100 of payroll, and that's what it cost in 2010. If there were no changes, as far as prior losses or changes in the type of work that is done, then that employer would expect to pay about 44 cents on that same risk today. And so I think that has a visual there that things are really moving in the right direction. The next slide talks about, again, puts some numbers to the portion of the market in New Hampshire that is assigned to the residual market, or that assigned risk pool. In 2017, just 5 years ago, we were at almost 8%, 7.8%, and the most recent data in 2021 has the state at 6.6%. Now, in some other states, in some other larger states, or states where you have very large employers, you might see that number smaller. But New Hampshire, I think, is a little bit unique in the sense that we do have a lot of small businesses and a lot of new businesses. We have entrepreneurs in the state, and those are the types of business, as mentioned, that do tend to wind up in the assigned risk pool. And so that 6.6 number is very impressive. What's the next slide? Is that me also? Nope, going back to Danielle.
So, having talked a little bit about the requirement to secure coverage, and Christian, I think, did an awesome explanation about the rates. What happens then when you're an employer and an employee has come forward and said, I got hurt at work? Employers do have certain obligations in that regard. Employees have an obligation to tell the employer that something has purportedly happened. Employers then have an obligation under the workers' compensation law to notify the Department of Labor when an employee reports a work-related injury, and they do so by filing a form called a first report of injury. All forms related to the workers' compensation claims benefit system can be found online at the department's website if you're ever interested. And that includes the first report of injury form if you're ever looking for one. Employers should also provide a copy of that first report of injury to their workers' compensation insurance carrier when they're filing it with the Department of Labor. And that's so that the insurance carrier is able to then undertake their obligations or responsibility to review the claim and make a determination about whether or not it meets the applicable standards as set by the law to make it a workers' compensation claim. So that's a really important first step that has to happen in all instances. There are certain circumstances when an employer can choose not to send a copy of a first report of injury to its insurance carrier. And those instances are going to include if the injured worker had no lost time from work, the injured worker had one-time treatment, so there's one doctor's visit that cost less than $2,000, and the employer is not disputing the dollar amount of that treatment and they pay that medical bill within 30 days. That's referred to as like a first aid claim at that junction. juncture. In those instances, employers still have to notify the Department of Labor by filing a first report of injury, notifying the department it happened, but you don't have to tell your insurance carrier. You will be obligated to tell your insurance carrier if any of those three parameters are changed in some way. There's more medical treatment, the person ended up having lost time from work, or you end up disputing that bill and or you don't pay that bill. And really, as you hopefully never navigate, but if you have to navigate this system, if there's questions about first reports of injury, you can always contact the department and we're happy to provide technical guidance about it. So what happens after a first report of injury is filed? If a claim is determined accepted by any mechanism, the employer's workers' compensation insurance carrier is going to be responsible for a host of benefits under the workers' compensation law. Those benefits are going to include payment of what's called indemnity benefits, cash payments for lost time out of work for your injured employee, payment of medical expenses, payment of loss or damage for permanent impairment as a result of the injury, and provision of vocational rehabilitation services if they're determined appropriate. So those will be your insurance carrier's benefit obligations. In certain circumstances, an employer is responsible for providing certain types of workers' compensation benefits, and those benefits include reinstatement of an injured employee to his or her job of injury in certain circumstances, and providing temporary alternative work opportunities to an injured employee in certain circumstances. And any time that there are questions, whether you're an insurance adjuster, whether you're an employer or an injured worker, about how those benefits work, what am I potentially entitled to under the statute, what do I do if there's a dispute about provision of those benefits, you should contact the Department of Labor, because again, we're always happy to provide any technical guidance or assistance that we can. The Department of Labor, in its role of overseeing the workers' compensation scheme, also is responsible for maintenance of and regulation of something called the Second Injury Fund. And I think this is a good thing, especially for employers to be aware of. The Second Injury Fund was created as an incentive to encourage employers to hire or retain employees who had permanent physical or mental impairments of any origin by reducing the employer's liability for workers' compensation claims. The Workers' Compensation Injury Fund ultimately ends up limiting workers' compensation liability if an employee gets or sustains a compensable work-related injury by reimbursing your insurance carrier for certain expenses that were paid on a qualifying claim. So there's a way there for an insurance carrier to get reimbursement for money spent on qualifying claims, which can then help, reduce liability for those claims and lower overall costs. To qualify, there are a whole host of factors that have to be met, one of which is that employers have to knowingly hire and retain a person who has a pre-existing and permanent physical or mental impairment. Again, it's an incentive program to hire and retain folks who have those types of either injuries or disabilities. So we always do suggest, it's a good program to have out there. Talk to your workers' comp insurance carrier about the Second Injury Fund if you haven't. What do they potentially need from you? How would you go about maintaining your documentation? And or you can always contact the Department of Labor. We have a special funds coordinator who can provide any technical guidance necessary about eligibility or requirements on how reimbursement works.
I might just say personally that's great information to have on the Second Injury Fund, because it's kind of a little known piece of the whole workers' comp system, but it really does help the whole system work efficiently. Sorry, did I lose that?
Nope.
Okay.
Nope. You're still on board here.
All right. So I'm going to talk a little bit about maintaining that market. In order to keep that market strong, it's important, as Danielle was talking, among other things, when there is an injury, make that report, contact the carrier, get the ball rolling, because if the whole system works well, if everyone's working together to get the care and the recovery needed for the injured worker and get the worker back to work as soon as possible. Other ways to help maintain a strong market, we do recommend working with an agent, for employers to work with an agent. They can help find the lowest available premium. They can answer questions. They can find the right kind of carrier that meets the the type of business that that employer is working with. There are different carriers out there that have different specialties. And also very important that the agent can and does help through the required audit process. All policies are audited at the end to match up the premium with the actual risk. As I said, risk is based on payroll, and we need to make sure that the payroll is correct and that the right tasks, the right jobs that had been expected are the ones that occurred. So we talked about minimum premiums. The other thing is important to recognize that even though rates and those loss costs, those base rates might be going down over time, individual employers might see increases in premium due to, among other things, an increase in workforce, an increase in wages. Again, premium is based on payroll. If you increase wages, then your premium is going to increase if nothing else changes. Also, an individual employer's loss experience, it has an effect. And so it's very important to manage the risks. The deputy commissioner talked earlier on about how we're seeing decreases in loss costs because it appears that workplaces are getting safer. And if employers continue to recognize the importance of assessing their workplace risks regularly, it will definitely improve the premium and bring premium down for the whole system. I think the next slide talks. Yeah. So then I want to talk a little bit about NCCI, a little deeper on NCCI. This is the organization that our state, through legislation, relies on to work to develop those base rates, those loss costs, and generally to run the system on a broader piece. They work, as Danielle mentioned, they're the administrator for the assigned risk plan, among other things. NCCI is contracted by 35 states and the District of Columbia to develop their rates. They've been doing it for a very long time. We're coming up on 100 years. I saw Justin on the call. He's our state kind of liaison, state rep for NCCI. And there's going to be a big party, I imagine, Justin, at some time soon, right? The other thing that's important is because there are 36 different jurisdictions that rely on NCCI. NCCI is regulated. It's a regulated entity by each of these 36 jurisdictions. And so the oversight on NCCI and their activities and their rate making processes, it's strict, and there's lots of redundancies. And so if one state actuary, state regulator sees something different or sees something weird in the data that comes through NCCI, we do talk to one another, and then the conversation will be brought to NCCI, and we'll figure out either if something's wrong or if something's different. If there's any changes to the way NCCI does their work, year over year or over the course of several years, they will come to the department, and we will have lots of conversations as to why any of these changes in their process is good or necessary. And then we talk quite a bit as to any of justification and support for those changes. And these conversations that NCCI is having is not just with New Hampshire; they're having them with all of the other states that they work with. NCCI does a lot of research in the changes in the workforce across the country and in different regions, and they're constantly looking at changes in work environments. NCCI collects and analyzes medical expenses to the workers' comp system, and they do this in very fine detail. They look at New Hampshire specifically. They look how New Hampshire compares to the Northeast region. They also look countrywide. Next slide. Just wanted to give you a sense of what other states beside New Hampshire relies on NCCI. Those are the ones in dark blue. As I said, there are 35 in the District of Columbia. Also, the other states, the states that don't use NCCI as their bureau, as their rating agency, what they you might notice that some of those are some of the larger states, and because they're larger, they have the ability to kind of work with the data within their state more so than a state like New Hampshire might. Nevertheless, from what I understand, some of those larger states rely on NCCI data as their statistical agent to collect the data from member carriers anyway. Yeah, we can go to that next slide, and I think Ruju, this was the one you're going to talk about. This one, yes?
Yes. So my name is Ruju Dave, and I'm the workers' comp analyst at the New Hampshire Insurance Department. And I looked at a few different topics that I wanted to discuss. And to continue on the NCCI, one of the things I wanted to let everyone know is that NCCI also collects data on class codes and occasionally make changes, and they will send it to us for approval, because I do get that question many times, that who changes the rates and how it is changed and stuff like that. But mostly I wanted to talk about few other issues which I get called for most of the time. One of them is out-of-state work. In voluntary market, one might find a carrier which provides coverage in multiple states, but in the assigned risk market, sometimes you need a separate policy. This coverage can be obtained by listing the states in the Part 3 of the policy. Operations which are known or expected should be listed under Section 3A on the policy information page. And on the other hand, if it's a possible exposure, it should be listed under 3C on the policy information page. The other question I get is certificate of insurance. I get calls that how do I check on this, if somebody has workers' comp coverage or not. This coverage information is available by going to www.ewccv.com. Once you're on that website, you can click on search policy and then track policy. Once you enter the information, if the policy is canceled, then you will be notified on that. It's something new that NCCI has started recently, and it is almost in real time that you will know that the policy was canceled. Department of Labor also has a link on their website if you need to check from Department of Labor's website if somebody has a coverage or not. The other topic that comes up all the time is a subcontractor who is not required to carry a workers' comp because it's just a one-person company, and they don't, by law, they are not required to have workers' comp coverage. But one of the examples is when the state hires a subcontractor, they actually ask for coverage because that subcontractor might end up hiring employees. So for that, the best case scenario for the subcontractor is buying a ghost policy, or it's called a minimum premium policy, where the sole proprietor can exclude themselves from the policy, but if they hire somebody, then the coverage is there. If they don't hire anybody, then the policy falls back to the minimum premium of the clerical code. I would ask the sole proprietor, anybody who is looking for the ghost policy, to check with their insurance carrier how much that premium would be, because sometimes there are different minimum premiums with different companies. Next slide, please. These are just important reminders, and I think that we talked about this a little bit before, but I just want to make sure that, as Danielle mentioned, that up to 3 executive officers can be excluded, but you have to make sure that you tell your insurance carrier that you want to be excluded. I get many times I get calls where the executive officers will say that I asked for exclusion, but they didn't inform that insurance carrier because it has to go through that route. The insurance carrier will let Department of Labor know that they need to be excluded. Carriers can cancel a workers' comp policy with a 30-day notice for non-payment and a 45-day notice otherwise. If the insured cancels a policy, there is a minimum premium associated with that policy because of the audit situation, but carriers can cancel anytime with 45-day notice, and for non-payment it's a 30 days. Also, carriers must provide, by law, carriers must provide policyholders premium and loss information at least annually. And last but not least, this comes up a lot, is that policyholders have to cooperate with the carrier or the designee during the audit process, because it's a very involved process and insurance carriers can ask for a lot of information. And going back to a couple of slides, I think that Christian mentioned that if you work with an agent, it will be much easier to go through the audit process. And back to Andrew.
Well, we appreciate everyone's attendance, and I don't see any comments in the chat room, but we certainly invite you to take a second and type any in if you have any. We also offer, Danielle and Wesley and Christian and Ruju the opportunity to have anything else to say if they'd like in the interim. Go right ahead. Absolutely.
Piggybacking off what Ruju had just touched on, the issue of exclusions of your officers and manager members is one that comes up frequently at the Department of Labor. Sounds like it comes up a lot at the Department of Insurance as well. And there is like a required process and that required notification that has to happen. And something that we will see on our end is failure to follow that process and failure to notify the Department of Labor of your exclusion can invalidate your exclusion. So you do want to be careful that you're talking to your carrier and making certain that your carrier has filed it for you if that was the intent.
We do have one question, and I'll just ask the question, and the relevant subject matter expert can feel free to jump in here. But the question is there any consideration being given to a medical fee schedule in New Hampshire? Danielle, is that you?
I'll jump in if no one else wants
go right
to.
ahead. Yeah,
That's a topic that frequently comes up. I think it's come up over the years, and Christian might recall, I think we've been over at the legislature together at times when legislation has been proposed for it. There is not one currently. So there's not a medical fee schedule in the New Hampshire workers' compensation system that sets caps or set fees for certain types of medical services. There also isn't any designated list of types of medical services that qualify as workers' compensation medical services. It's a much broader standard than that. I'm not aware of anything being proposed at this juncture putting forward another attempt to implement a fee schedule. If anybody has information more recent than mine, I think that's a good thing to share. But currently, I'm not aware of any initiatives to implement a fee schedule into the workers' compensation system in New Hampshire.
I'll just jump in very quickly. We've obviously been following the legislation that's been filed for the upcoming legislative session, and we have seen nothing proposed as of yet that indicates that the legislature is looking to go in that direction at this time.
Can I say really quickly on that, Danielle? I think that the law was changed. I forgot the year exactly, but a few years ago, where the reasonable, what was the wordings on that? I don't remember exactly, but that might have helped.
Yeah, the reasonable value of service provision in the workers' compensation law changed. If I'm doing this from memory, I want to say around 2017, maybe 2018. Reasonable value of service is a type of dispute that can come up in the workers' compensation context that involves primarily the insurance carrier and the medical provider. There's not a fee schedule in New Hampshire currently. So when medical providers are submitting bills to the workers' compensation insurance carrier for payment, the insurance carrier receives that bill and has a specified time frame by law to review it and make a determination on whether or not it's a compensable expense that they're liable for, or if they're disputing it's a compensable expense, issue a denial. There are instances, and our law allows for instances, when an insurance carrier can review the bill. They're not denying liability for it. They're agreeing this is an expense that's reasonable, it's necessary, and it's causally related to the date of injury, which we are on the risk for. However, we're looking at the charge, and we do not believe that the charge from the medical provider is a reasonable one. In those instances, the law allows for the insurance carrier to issue what they believe to be the reasonable value of the service, so they must issue some payment to the medical provider. If that is then disputed, the medical provider has the option to initiate an adjudicative proceeding through the Department of Labor for a final determination on what is the reasonable value of that service. Typically, the provider is asserting 100% of the bill is the reasonable value of the service. The insurance carrier can come in and refute why they think it's not. The law, when it was amended, built in a dispute resolution process, which we've seen, or at least our numbers have indicated, has been successful. Prior to petitioning the department for a hearing on a dispute related to reasonable value, the parties do have to make attempts to resolve the dispute themselves and demonstrate that they've made resolution attempts to the department. So over the past several years, we have gotten requests for hearings in that regard. Not by and large, the bulk of the ones that are requested ultimately don't end up going forward because the cases are resolving.
If there's any other questions, please enter them in the chat. In the interim, I invite you to copy down the information for the various agencies up there so that if you have a question that's better asked directly, that you know the contact info for folks to reach out to. But not seeing any more questions, we very, very much appreciate not only the participation, but certainly the expertise of our colleagues over at the Department of Labor, Danielle Albert and Wesley Gardner. Thank you very much to everyone who joined. Commissioner Bencourt, any closing statements?
Sure, just very briefly, I too want to thank everybody who attended today's session. I want to thank my colleagues not only here at the Insurance Department, but obviously over at the Department of Labor as well. A couple of different times, people gave shout outs to Justin Moulton. I did want to do that as well from NCCI. He is a great partner for our department. We enjoy working with him very, very much. And so once again, we appreciate everybody taking the time to join us today. If you're aware of anybody that wanted to join us that was not able to, my understanding was that there was a little bit of a speech earlier this afternoon involving our governor. So if they were predisposed over listening to that, we are recording this and we will post it to our social media platforms and so that they can catch the presentation at a later time. But we do look forward to being back next month. Andrew, have we settled on a topic yet?
I think next month we'll be discussing the finer points of the NAIC website, National Association of Insurance Commissioners. There's a lot of great resources there for consumers, depending on what you're looking for. And we'll be working with some folks there to hit the highlights of what you may need to know as a consumer and where you can find it on their website. So stay tuned for that.
Wonderful. Well, as Andrew said, we'll stay tuned for that. But for today, thanks so much, and we'll see you soon.